What's up, investors? It's the Russian dude. And so apparently the most recent non-farm payrolls report came pretty much ideal, perfect, which at this point almost guarantees that the Federal Reserve will decrease one more time the interest rate in December this month. So in today's short video, let's talk about this report, what numbers it is showing, and why once again the decrease is most likely happening. It is not 100%, but the probability of this happening is more than 90%. So yeah, the most recent non-farm payroll came to us at 227,000, with the expectation of 202,000, so as you can see it was able to beat the expectations, and the previous number was only 36,000 new jobs added. At the same time, the US unemployment rate also came recently, which showed 4.2%, exactly as expected, with the previous number being 4.1%. Both of these reports came in ideal case scenario for the Feds to start thinking about cutting the rates one more time before the end of this year. And here are the three scenarios. One of them is the ideal one that the Feds were expecting to see during these reports in order to take the decision whether they should cut the rates or not. The very first scenario is whenever if the non-farm payrolls came to us at above 250,000 new jobs added and if the unemployment rate will fall below 4%. While these two reports might sound strong, that the US economy is doing good, jobs are being added, unemployment is declining, in reality, this will most likely it will most likely make the Feds to pause the interest rate cuts, because these are the first two signs that the inflation will most likely be on the rise once again. And in order to fight the potential increase in the inflation in the near future, once again they will have to keep the rates at least current level. The next scenario is if these two reports will be extremely weak, if non-farm payrolls will be less than 50,000 new jobs added, pretty much going 2 months in a row of being so bad, and if the unemployment rate will go above 4.3%. This will mean that, well, unemployment is getting higher, jobs are not being created, the economy is about to break. For this reason, the interest rate cuts will need to happen as soon as possible, maybe even more than 0.25%, maybe once again another decrease of 0.5% in order for the Fed to help the economy to restart itself a little bit faster. And then there is a third case scenario, if the non-farm payrolls will be in between these two numbers, between 50,000 and 250,000, and our most recent report came exactly at that, 227,000, and if the unemployment rate will be also between the two numbers, 4% and 4.3%, and well, here as well we got a perfect match, 4.2% unemployment for the last most recent report. In this case, according to the Fed's expectations, the recovery is going exactly according to their plan. The conditions are perfect, the conditions are ideal, and most likely, as previously expected, as there was expected one more rate cut to happen in December, most likely they will also proceed with their plan and just do another small rate cut of 0.25%. At this point, these two ideal reports, non-farm payrolls and unemployment data, they pretty much almost guarantee that in December, soon, within a couple of weeks, we're gonna see another rate cut. But well, you never know, Federal Reserve definitely has some additional data that we regular people do not have. They might see something what we don't see yet, they might experiment with something, who knows, but well, at least at the moment of recording this video, the probability of another rate cut in December is definitely a big one. And since the economy is recovering in the timeline that the Feds wanted, it was also expected that if these two reports will be ideal, it will also cause a small temporarily increase in the stock market value, which has once again at the moment of recording this video, last Friday, the stock market, the S&P 500, increased by approximately 0.2%. Jerome Powell must be very happy right now, everything is according to the plan, and well, my job here is also done, reporting on these news and events. Guys, if you enjoyed today's episode, please subscribe to my channel if you want to see more videos like this. Thanks so much for watching, see you tomorrow.